They call it tiny, but sometimes the smallest seeds bloom into the tallest trees. As we head into 2026, a quiet yet growing swell among small-cap stocks is signaling one of the most compelling windows for outsized gains in recent years. Mega-caps, tech giants, and headline-grabbing companies have dominated the market for so long that many investors have forgotten one crucial truth. You don't need billions in market cap to generate significant returns. Sometimes, all it takes is a niche, timing, and strategic insight. Over the past 2 years, small-cap stocks have begun to stir, drawing attention from analysts and investors alike. New macroeconomic conditions, including easing interest rates, improved liquidity, and a shift away from overvalued large-cap equities, have created a fertile environment for smaller firms. Historically, small-cap companies respond more sharply to interest rate changes. Lower borrowing costs provide them with breathing room, enabling debt refinancing, strategic expansion, or survival during lean periods. Financial flexibility that larger companies rarely experience to the same degree. Many investors believe 2026 could mark the year when small caps reclaim the spotlight. Valuations for mega-cap stocks remain high, and economic pressures are forcing investors to look for value in smaller, more agile companies. Current small-cap valuations appear attractive relative to their large-cap counterparts, with forward price-to-earnings ratios indicating potential upside. This relative affordability positions small-cap stocks as a viable growth opportunity in a market that has long favored stability over volatility. The companies most likely to benefit are those with clear niche advantages or innovation-driven business models. Small-cap firms positioned in emerging sectors, such as automation, clean energy infrastructure, industrial technology, and niche services, often have a higher probability of achieving breakout growth. Many of these companies operate at the intersection of critical market trends, including AI-driven logistics, environmental and industrial services, and reshoring supportive manufacturing, positioning them to capitalize on evolving demand and structural shifts in the economy. Undervalued fundamentals remain a key indicator for potential growth. Small-cap stocks that demonstrate reasonable valuations, manageable debt, and improving earnings or profit margins reduce downside risk while offering significant upside potential. Historically, companies trading at a discount while showing solid financial health have been poised for accelerated growth once the market recognizes their intrinsic value. Broader economic trends also provide favorable tailwinds. Small-cap companies are typically more responsive to domestic economic cycles than large global firms. As interest rates decline and stimulus measures or infrastructure investments emerge, small firms often experience amplified benefits. They are particularly sensitive to policy shifts, domestic demand, and regulatory incentives that favor local manufacturing and services, giving them an advantage over their larger, less nimble competitors. Looking ahead to 2026, the scenario for small caps could be, honestly, pretty compelling. As borrowing costs decline and inflation cools, companies that previously struggled under debt burdens gain operational breathing room. Margins widen, and access to cheaper credit enhances their capacity to invest in growth initiatives. At the same time, sectors like reshoring supporting industrial services, energy efficiency solutions, and specialized logistics or automation are experiencing rising demand, further amplifying growth potential. While large-cap companies remain expensive and less dynamic, savvy investors are starting to focus on undervalued small caps, driving capital inflows and renewed market interest. As earnings reports begin to show tangible growth, small-cap stocks may start outperforming expectations. Companies beating revenue forecasts and demonstrating strong operational performance attract attention, leading to rapid price appreciation. Stocks that were once discounted relative to larger peers can experience sharp multiples expansion, with some doubling or even tripling within months. Market indices tracking these companies may also rally, boosting momentum and drawing in cautious retail investors and institutional capital alike. Despite the opportunity, it is, crucial to recognize that small-cap investing carries inherent risks. Many small firms just don't have the financial depth and operational resilience of larger companies. Their balance sheets might be thin, their customer bases are often limited, and their industries can be pretty cyclical. Even minor economic or regulatory shifts can really impact profitability. Market sentiment, changes in interest rates, and broader macroeconomic fluctuations can reverse gains as quickly as they appear, which really highlights the need for careful risk management. Speculative behavior can, honestly, amplify both opportunity and danger in small-cap markets. Rapid price swings, crowded trades, and at times, even manipulation can create those classic boom and bust cycles. Investors who chase short-term gains might run into volatility that can, unfortunately, magnify losses, and some micro-cap stocks do remain susceptible to manipulation. So, discipline, patience, and careful research are, absolutely essential for navigating these markets successfully. Selecting the right small-cap stock really requires rigorous analysis and conviction. It's not enough for a company to just be small and undervalued. Investors need to have confidence in the business model, market positioning, and long-term growth prospects. Identifying firms with structural advantages, solid fundamentals, favorable macro conditions, and clear growth catalysts is, honestly, essential for mitigating risk and maximizing potential returns. So, analysts are increasingly signaling that 2025 to 2026 could, mark a small-cap resurgence. The valuation gaps between small and large-cap stocks indicate that many smaller firms are still underpriced relative to their growth potential. Companies with disruptive business models, especially in industrial, automation, or specialized service sectors, are already showing year-over-year growth, which suggests the possibility of breakout performance if conditions turn favorable. And really, disciplined investors who combine careful research with a long-term perspective stand the best chance of capturing these opportunities. For those seeking significant returns in 2026, small-cap stocks deserve, some serious consideration. Success, however, really demands diligence. Investors must evaluate fundamentals, track catalysts, monitor potential red flags such as weak financials or excessive debt, and remain aware of market volatility. Strategic patience and informed decision-making are absolutely critical. Investing in small-cap stocks isn't about chasing headlines. It's about identifying undervalued companies with compelling business models and long-term potential. When macro conditions, market sentiment, and company performance all align, small caps can deliver transformational results. Approaching 2026, investors should develop a focused watch list of promising small-cap companies, monitor performance over 12 to 24 months, and use incremental investment strategies to manage exposure. Diversification is key, since no single stock is guaranteed to outperform. The potential rewards are significant, but they come with commensurate risks, which really emphasizes the importance of disciplined investment practices. As the market prepares for a new year, small-cap stocks may represent one of the most underappreciated opportunities. Cheap valuations, structural tailwinds, and growing investor appetite for growth outside mega-caps all create conditions in which hidden gems can emerge. Success in this space is not determined by market cap alone. Agility, timing, and niche specialization can yield extraordinary results for those willing to study, wait, and act strategically. If this analysis resonates with you, the next step is to stay engaged. Follow the market closely, share insights with other investors, and participate in discussions about emerging small-cap opportunities. In 2026, the right research and disciplined approach could uncover the next generation of high-growth stocks. By staying informed and vigilant, investors can position themselves to capitalize on a small-cap resurgence and uncover opportunities that may otherwise remain hidden. Subscribe for more deep-dive analysis on small-cap stocks. Share this insight with your network and comment small-cap 2026 to join the conversation about which emerging companies could deliver extraordinary growth in the coming year. Opportunities in the market often hide in plain sight. Those who prepare carefully are the ones most likely to seize them.